Hey, welcome everyone. I'm Ted Earhart. In case you didn't know, we are in the midst of a major stock market rally, especially in the technology-oriented areas of the stock market. You know, the public is most familiar with the Dow Jones Industrial Average, but if we want to gauge what's happening in the tech sector, we typically look to the Nasdaq. Now, the Nasdaq in 2020, despite all the financial wreckage from the pandemic, the Nasdaq surged over 45%. Now, that comes on top of 2020 when the Nasdaq was up in excess of 36%. Over the combined 24-month period, the Nasdaq has doubled. Now, that in combination with lots of instances of what is clearly speculative behavior has market historians and professional investors asking this question, like, are we in the midst of another late 1990s like stock market bubble? We're going to spend a few minutes talking about that today, specifically contrasting some of the things that we witnessed roughly 20 years ago and how they compare to what's going on in the present. So to kick this off, I mentioned speculative behavior. I just want to highlight an article that was in the Wall Street Journal most recently that really highlights what I'm talking about. So if we go back to the spring of 2020, we're in the early days of the pandemic and obviously the huge shift to people working at home. The market really quickly realized there were going to be some major winners, companies that actually benefited from the shift and people working remotely and so forth. And of course, one of those companies that people identified was this Zoom video communications, ticker symbol ZM. You know, I would assume most people watching this probably used Zoom's product over the last 10 months or so. But get this, there's this other company out there called Zoom Technologies with the ticker symbol ZOOM. However, it has nothing to do with the Zoom video communications, nothing to do. Apparently, investors not doing any due diligence, confused, like didn't know what they were doing, confused the two companies and sent this Zoom Technologies up nearly 20-fold over the series of a couple months before giving back all of those gains. Especially once Zoom Technologies changed their ticker symbol to ZTNO. I mean, talk about just insanity. Furthermore, more recently, Elon Musk tweeted about some company that's a competitor to Facebook's Messenger app. And he tweets out, use Signal. So the name of this business is Signal. I don't claim to know much about it, but there's another business called Signal Advance. And once again, apparently investors doing no due diligence, just speculating based on a tweet from Elon Musk, sent the share price of this unrelated business up from like less than $1 a share to nearly 40. So we saw a 40-fold explosion in the stock price, just basically on some whim at the moment. These two examples really embody the type of market sentiment that we've been in the midst of really for months. Now, this brings back a lot of memories to people who have either lived through or have studied the period of the late 1990s. So I just want to start there and just kind of refresh people as to what we saw back then. So we're looking at the NASDAQ 100, the 100 largest companies in the NASDAQ. And from 1998 to the peak in March of 2000, we saw the NASDAQ basically go up nearly 400%. And take a look at that meteoric rise. But of course, that led up to a major market bust, which we'll zoom in on here. Here's the bust, March of 2000, all the way down to the bottom. I'm slightly obstructing this, but the NASDAQ was down about over 80% from peak to trough. And because it was such an extreme run up and down, a lot of people remember this and want to know, like, are we in the midst of something like that today? Although I should mention that the Dow, which I also graphed up here, although the Dow certainly had a surge and a bust, it was down much less than the NASDAQ on a comparative basis. Still down about 34% peak to trough, but not quite as extreme. That said, let's talk about the late 1990s and how that compares to today. The saying it's been attributed to Mark Twain, that history doesn't repeat itself, but it often rhymes. And it certainly seems like there's a lot of things occurring right now that rhyme with the late 1990s. So among them, the three I'm going to touch on are as follows. In the late 90s, we saw this surge in initial public offerings. So if you remember, think back to what was going on in the late 90s. In the mid 90s, I guess, we had the advent of the internet. People were just getting online. I remember pretty distinctly all the little CDs that you would get in the mail for AOL, America Online. Well, anyway, there was all these businesses that were formed and went public, basically promising to take advantage of e-commerce and, promising or making big promises to investors. And we saw a surge in the numbers of companies listed. Of course, many of these businesses made no money. I mean, some of them really didn't have anything more than an idea, but that did not stop investors from pouring money into them. So we saw the stock prices of businesses that didn't make any money basically go through the roof. And that was kind of captured in that first chart I showed you. This, of course, led to, the more these stock prices went up, the more they were written about in the media, as were stories of people getting rich, especially young people, people quitting their jobs to become investors. And it kind of created this positive feedback loop where, the more stock prices went up, the more interest was generated, which would draw more people in. They would put money to work, and it just kind of fed on itself. So we saw at that time a heightened interest of young investors, and that also kind of correlated with another technology at the time. Going back is this first time that people could buy and sell stocks over the internet. What were the big ones back then? Of course, like E-Trade and Schwab and etc. Took advantage of that, and we saw this surge of people that kind of called themselves day traders. Well, how does that compare to today? Well, let's kind of walk through these and unpack them one by one. Take a look at this. This is a recent headline in the Wall Street Journal. We saw record initial public offerings in 2020. And guess what? It was the most public offerings, the most companies coming to market since, guess when? The year 2000. What a coincidence, right? And the Wall Street Journal says that's looking to continue into 2021. No surprise. And likewise, a lot of these businesses don't earn any money. A lot of these companies are coming to market. They're promising to deliver or get in these hot new industries, which we'll look at momentarily. A couple that come to mind specifically are electric cars, and like anything that even rhymes with electric cars right now is crazy. Of course, that's also true with vaccines and biotechnology, kind of just all the things that are right now, looking out to the future that people say have promise of, just huge paydays, if you will. But what I want to share with you right now is this stock screen that a legendary value investor has been talking about for the last several months that I've kind of recreated here. Basically, he's kind of sarcastically been saying, the best strategy for 2020 was to put all your money into companies that lost money the year before. So we did a stock screen. I tried to replicate the stock screen he's talking about. And basically you can come up with a list of 300 to 500 companies that these aren't tiny little microcap companies. These are all companies with a market value over $1 billion. And so what's the word I'm looking for here? What's common between these things is they're all worth over $1 billion. They all lost money in 2019. And this list of roughly 500 names that I came up with, on average last year, were up 90% in 2020, with the median being 40%. And again, this is just another example of how crazy the market has been in recent months. So here's the top 30, just to kind of give you a hint of what we're seeing out there. I put these in order by the change in the stock price in 2020. So again, you can see here's all the market value. These businesses are all worth over $1 billion. Here's the pre-tax income, or in the case of all these companies, losses in the latest fiscal year. And again, here's the stock price change of these companies. And I kind of mentioned this already, but you can, if you look at the industry, you can just see where the market froth is. For example, the biggest name or the biggest winner in this list was this Novavax, which I believe is a company that says they're in the business of vaccines. And Blink Charging, of course, has to do with electric cars. This Riot blockchain, there's another one, cryptocurrencies. I'm sure many people watching this have heard of Bitcoin and these other versions of cryptocurrencies. Of course, there's Plug Power, more electric cars, Tesla, more electric cars, etc. You can just see where the market froth is when you look at these figures. And again, all these companies lost money in the last full fiscal year. So it is just unbelievable how much this rhymes with the late 1990s. And no surprise, all of the things that I just said and the stories written about all these businesses has drawn investors in, has drawn everyday average folks, retail investors. More than 10 million new brokerage accounts were opened in 2020, according to the Wall Street Journal. And take a look at this. This is also out of the Journal. It shows the web traffic to these major online brokerage platforms. And you can see the cutoff in 2020. Look at 2019, 2018, basically no change. Then this year, things just took off as the stock prices really started moving up. And of course, people had more time as well with so many things being shut down in the calendar year. So are we in the midst of a stock market bubble? Is it 1999 all over again? Well, going back to this Mark Twain quote, there certainly are a lot of things that rhyme to the late 1990s. And I think it's I think it's virtually certain that there's certain pockets in the stock market where we are seeing bubbles. The question is the entire stock market at risk? And I think the answer is no. And for example, take a look at a couple other sectors that we have not talked about, specifically financials, U.S. real estate, and energy. This is 2020. Look, all these sectors were actually negative for the calendar year 2020. And my point here is we are not seeing the type of froth that we're seeing in these areas like the NASDAQ. So I think at the end of the day, what does this mean for investors? Well, it really comes back to this famous Warren Buffett quote that I've mentioned before, and some of you may have heard of it. Buffett famously wrote in one of his annual letters, the less prudence with which others conduct their affairs means the more prudence with which we should conduct our own. So in other words, if you are an investor and looking to put money to work today, just knowing everything I just said, you need to be extra cautious. You need to be very skeptical and careful about getting sucked into some of these so-called story stocks because, you're probably paying peak prices or at least very rich prices due to all the market optimism. Generally the best time to be buying anything in stocks is when there's a lot of pessimism in the marketplace because that gets priced in. So ultimately, we may be, I certainly think there are parts of the market that look ripe for a major pullback, but it doesn't mean abandon ship. There are definitely areas of the market, as we just highlighted, where better opportunities are much more attractive looking prices exist. So I don't think you need to bail out either, but it's definitely going to pay to be prudent as we continue to work our way through this extraordinary period. So anyway, I appreciate you tuning in today. If you got any comments, please drop those below. I'm always curious to hear what you're thinking, if you enjoyed the video or anything else we should be talking about. So that's it. We'll see you next time.